So as we break down this whole classification of how you can evaluate stocks, the different buckets they might fall in, or mutual funds or exchange trade funds, where they kind of fit, we're talking about like growth and income. And then the other thing under style that gets in there a lot is value. As we mentioned, you see that in mutual funds where it might say it's a growth fund versus a value fund, which really is more growth versus income if you ask me. That's just my opinion on it when you're looking at it. Though, once again, with value, you see a lot of income stocks, dividend-paying stocks that get wrapped up in that, particularly in mutual funds. But a lot of times you hear about value being associated with purchasing of stocks or fundamentals or evaluating stocks. And the idea is that you're looking for stocks that are of value, as in underappreciated, underpriced. It's like bargain hunting, right? You go to the store or whatever, and you're looking for something that's on sale. Well, that's the idea of a value stock. How I look and how others look at this stock is on sale. And there's something going on with the stock that might have driven its price down. Maybe they had a bad earnings quarter, or they had a bad announcement, or said something, sales are going to start slowing, or something was happening in the global economy, whatever it might be. But you feel that they're underpriced, they're underappreciated, and that their long-term prospects are good. And you're kind of bargain hunting. You're looking for that great value, and you're looking for great companies basically at discounted rates. Looking at their things like their cash flow, and looking at their debt ratios, and looking at some things we'll be learning about as far as ratios. To look at what could be a higher long-term gain with that stock. A lot of times value stocks can have a greater risk. That's where they differ from income stocks, true income stocks. A true income stock is usually a larger company, pays a regular dividend. Maybe it's a company like Johnson & Johnson that's paid dividends for 50, 60, 70, 80 years. Companies that paid for hundreds of years of dividends coming out, so they're probably not very risky overall. But value stocks can be risky because whether they're a growth stock or a dividend-paying stock, the idea is they're undervalued. And maybe they're undervalued for a reason. Maybe they're struggling for a reason. Maybe they're about to go bankrupt. Maybe they are going to have a period of long-term decreases in earnings and sales and all that, and it might be a bad investment. So understand that a lot of times value stocks, they could keep going down that elevator. So be wary of that. True value stocks can have a good upside, but like anything that's risky with a high upside, it might have a higher downside as well. It just may be a dog and really never recover. So when you're looking at it from a style standpoint, think growth. For that rapid growth is what you're looking for. Price appreciation, income, where you're going to get dividends and get that regular quarterly money with some capital appreciation would be great. And value, you're really on that bargain hunt, and they could really fall in either of those styles, in my opinion. So just be aware of the differences between those.